The trend just started, marked by this red triangle. Let's wait for the first breakpoint. Here it is. Let's take a trade. Enter right after the break. Set the stop loss at the stop loss line or at the last high. For simplicity, let's target a 1 to 1.5 risk to reward. We won our first trade. Let's wait for another breakpoint that signifies trend continuation. Here it is. Take the trade. We won this one too. And so on. If you want to learn how to use this new and completely free indicator, and to turn it from this mess to this simple and useful price action tool, and use it with other indicators to create 2 profitable strategies, make sure to stick around for the whole video, and I will explain everything in depth. For this video, I will be using TradingView. If you haven't tried it yet, you can open it with the link in my description. Now that you have your charts ready, let's add the indicator. Go to the Indicators tab and type Market Structure Trend Targets. It will be this one, by Chart Prime. This indicator was just released on December 30th, and because it's so recent, very few traders are using it, so you can get ahead of the crowd by mastering this tool before it becomes mainstream. This indicator uniquely identifies trend direction, continuation, and mean reversion points by marking significant breaks in price levels. Key features of the indicator are: 1. The numbered breakout points. The indicator identifies key breakout points, right as price breaks above a previous high, for uptrends, or below a previous low, for downtrends. The initial breakout, zero break, is marked with the entry price and a triangle icon, while subsequent breakouts within the trend are numbered sequentially, 1, 2, 3, and so on. 2. Mean reversion signals. The indicator not only identifies trend continuation, but also potential mean reversion points, marked with diamond icons. In an uptrend, if the price falls below the stop loss and then re-enters above it, a diamond is plotted, suggesting a possible mean reversion. Let's take a trade and target the previous high. This feature makes the indicator useful even in ranging markets. Similarly, in a downtrend, if the price moves above the stop loss and then falls back below, it indicates a reversion possibility. Here's some examples, targeting the previous highs and lows. Three, dynamic stop-loss levels. In uptrends, the stop-loss level is placed below the price to protect against downside moves. In downtrends, it is positioned above the price. If the price breaches the stop-loss level, the indicator resets, indicating a potential end or reversal of the trend. This tool can work for high time frame trading like the 4-hour and daily, but for scalping, I would recommend using tighter stop losses, which you can get using an indicator like the ATR Stop Loss Finder by Verifid, or Chandelier Stop by Pip Charlie. They also allow you to customize the stop loss size, which you cannot do here. 4. Percentage change. Traders can toggle on a setting to display percentage change from the initial breakout point to each subsequent break level, offering an easy way to gauge trend momentum over time. This is particularly helpful for identifying how far price has moved in the current trend. Here's an example for the uptrend and a downtrend. 5. Trend visualization with colored zones. The chart background is shaded to visually represent trend direction, with color changes corresponding to uptrends and downtrends. This makes it easier to see overall market conditions at a glance, as you can see here. Note, if you want the trend-based coloring to appear, you will have to go up here and hide the original chart candles. Now, let's move on to the user inputs, how you can configure this indicator to fit your market and time frame best. Length defines the number of bars used to identify pivot highs and lows for trend breakouts. Higher length makes the indicator's sensitivity lower, hence printing less signals. Lower length does the opposite, but with more signals, the accuracy reduces. Display percentage. Option to toggle between showing sequential breakout numbers or the percentage change from the initial breakout. Display trailing stop. Option to turn on or off the default dynamic stop loss. Colors for uptrend and downtrend. Allows customization of color zones for uptrends and downtrends to match individual chart preferences. Now let's talk about how you can use this indicator in a strategy to grow your account. For the first one, I will be using the price of GBP USD in the 15-minute time frame. First, let's configure our main indicator. Go to the indicator settings window and follow my instructions. In the inputs, leave the length at 10. Uncheck display trailing stop. We will be using our own method for setting stop losses and change the buy color to green. Now in the Style tab, disable this plot line, disable candles trend, and labels. That's it. Now we see the main feature of the indicator without any distractions. Now let's add our confirmation indicators. Go to the Indicators tab and search for Hull Suite. Add this one by In Silico. This indicator will show us the trend direction. It will be our first confirmation indicator. Go to its settings and change the length to 200. Leave everything else on default. If the Hull Suite line is red, we will only take short trades. And if it is green, we will only take long trades. For the second confirmation indicator, search for volume delta, a new indicator created by TradingView themselves. If you're still on the free plan of TradingView, unfortunately, you will not be able to add 3 or more indicators. So if you're serious about trading, you can use the link in my description to get the first month completely free. This indicator will show us if the entry candle is the right size, not too big, signifying that the move is already over, and not too small, indicating that the signal is most likely false or that the price is consolidating. To enter, volume delta will have to be the same color as the entry candle and not too big or too small compared to others. But if you are already experienced with this pair, you can trade without it. So the strategy goes like this. For a buy, we will enter at a bullish market structure breakpoint if the Hull Suite and volume delta colors are green, and if the volume delta candle is not too big or too small. Set our stop loss to the last low and take profit at a 1.5 risk to reward ratio to keep it simple. For the second strategy, I will be using the price of Euro USD on the 5-minute time frame. Let's configure the base indicator. Follow my instructions. Change the length to 8. Toggle on display trailing stop. In the Styles tab, disable lines and enable labels. We will be looking at these diamond labels for entries. That's it for this one. Let's add our confirmation indicators. First, search Volatility Oscillator. Go to its settings and change the length to 150. This indicator will help us see if the entry candle is strong enough. But if you're more experienced, you can trade without it and measure the candles yourself. For the final indicator, search support and resistance levels with breaks. Select this one by Lux Algo. We will use this indicator to set take profit and stop loss levels based on the current price action. Go to the Settings tab and change left and right bars to 20. This will show us the major zones. Everything's ready. Let's take a few trades. For a buy setup, we will want to see the price break or touch the stop loss level, then reject it with a bullish candle, and for a green diamond label to be printed. Then we will have to check if the entry candle is big enough. For it to be valid, the white volatility oscillator line has to break the upper channel. If both conditions are met, we will take a trade. To set our stop loss and take profit, we'll use the support and resistance indicator. Set the take profit at the resistance and stop loss at the support, or at the last low if the support zone is too far. Most of the time this will give us a risk to reward from 1.5 to 2, which is pretty good. If there are no lines printed, which sometimes happens when the market moves quickly in one direction, you can use older zones, but keep in mind that they might not be as reliable. Now let's look at a sell example. A bearish diamond will have to be printed, and the volatility oscillator line will have to breach the lower channel. If these conditions are met, we will enter a trade, and this time we'll set the stop loss at the resistance level or at the nearest high and take profit at the support. It's pretty much the buy setup flipped around. I hope you understood everything. Now go back test your chosen strategy for at least 100 trades and tell me how it goes in the comments. Thanks for watching, and see you in the next one.